Hey guys, welcome. This is King Helps. In this video, I'm going to be breaking down a 1:3 trade I took. So, without further ado, let's get right into it. So, I start my top-down analysis from the daily time frame, and so the trade I took was on right here, 25th April, Thursday. So, my strategy is pretty simple. It's based on ICT 2022 model. Essentially, what I want is to see liquidity sweep below all lows, structural lows, previous day lows, previous week lows. Essentially, any pool of liquidity, right, that is pretty predominant that price would want to sweep under, and then follow by an imbalance that shifts market structure above the old high in the buy scenario, returns to fair valuation or discount, and then go up. So we have sell side liquidity sweep, right, below all lows or relatively equal lows. Then we have market structure shift above the high that sent price to shift, that sent price, sorry, to sweep liquidity below right here, and then we return to discounts when in a buy scenario. So for a sell scenario, we return to premium. And so while in discount, we look for a fair valuation gap. And we go long. All right, so let me show you the trade. So over here, you can see I really want to start my analysis from the daily time frame all the time. So over here you can see we have daily order block, right? And over here is an old low below which price we have liquidity, sell side liquidity. So that's two confluence on the daily time frame. So we'll move to the 4-hour time frame. On the 4-hour time frame, we can see that price traded into this beautiful fair valuation gap, right, after sweeping liquidity below this low right here. So price entered this fair valuation gap on the 4-hour, which is also a daily order block, right? And then we have further confluence. So we will now go to the 1-hour. Usually it also be nice if I'm able to see a 4-hour market structure shift, but in this case we don't have it. So we move to the 1-hour. Now on the 1-hour, you can see that after sweeping this liquidity right here, price took out sell side liquidity again below this low, and so that was further confirmation, sell side liquidity sweep below here. And what did we say we want after that sell side liquidity sweep or buy model? We want a market structure shift above the high that sent price to sweep liquidity. So that's this right here. So it's essentially the breaker block, yeah, because a breaker block is essentially the last high candle that sent price to break or sweep liquidity below here, right? So we have our market structure shift over here, and now what we want to do is that we want to outline our premium and discount array. So from the body, the lowest body here, to the highest body here, and we map out. You can see that this is a very nice imbalance, buy side imbalance, sell side inefficiency. And so we'll map out our fair valuation gap at discount. So we'll map out our fair valuation gap at discount. And so essentially we'll be waiting for price to return to this. We have a breaker block. We have a 4-hour fair value gap, which is also within a daily time frame order block. We have swept liquidity here. We've shifted market structure. You see confluence is left and right. So we want to go to the 15 minutes time frame to further refine this. For now, let's outline the low of this order block, because I use low of order block as my stop loss, right? So let's see if we can further refine this trade on the 15 minutes time frame. Alright, so on the 15 minutes time frame, our fib remains in the same place, but we can now see that this 1 hour order block has been further refined to this point. Now that's why we want to refine on the 15 minutes time frame. It gives us better risk to reward ratio, right? So this is a 15 minutes fair value gap. We can get rid of this right here, make the place cleaner. Alright, so now the price action of gold is actually quite precise, right? It has better price action delivery compared to Euro USD or GBP USD, those currencies. So in those currencies like GBP USD and Euro USD, you typically see a scenario whereby price will sweep the low of this order block, and then respect this one and finally go up. The XAU USD in my experience, right, in the few months I've backtested and traded on XAU USD, I've seen that price respects these order blocks. So for conservative traders, since this is the 1 hour order block over here, you can use this 15 minutes order block over here, because I mean, if price sweeps liquidity below here, what exactly, how highly probabilistic is it that price is going to come and then continue going here, right? So this for conservativeness will have been stop loss point. Other people over here, right? I use this, I was conservative. All right, so let's return back to the 1 hour. Now, further confluence I like to see on my trade setup is inducement. If you don't know what inducement is, you can go check YouTube. Inducement essentially just means like when you have a POI, like this is my POI over here, and so price starts trading lower towards it, but then before even reaching the POI, it starts to pump up. So now people who are not really smart money oriented would think, okay, you know what, since we're already at 50%, perhaps price will buy from this point, so they will start laying in their buy positions from here, not knowing that this is essentially an inducement. It's an early buy to induce people to come in, and price will come, sweep their liquidity, right, and then trade into actual POI. So this is our inducement. You can see this really beautiful inducement, like low resistance liquidity run. So these are inducement. So when you see inducement in your trade setup, it's just like essentially further confluence to your trade. So I want to be entering from the tip of the fair value gap. I typically enter like about a pip or so above, somewhere around here above, cost to avoid slippage. So stop loss, if you use here, you will have still been right. I used here, right, and I aimed for 1:3. So my trade setups are always 1:3. I aim for is 1:3. But if you had used these points, you would have also been right, because it's essentially a 1 hour order block. So like I guess you could say I was fearful or something, or I just really thought, okay, if price was really going to reverse, it's going to be from this fair value gap, right? So I realized either way I'm still going to get a 1:3. So I decided to be more conservative rather than aggressive. But this was actually a good stop loss zone. And then you could have aimed for this fair value gap for a good 1:7, right? I actually took this on a 1:3 because I like consistency. So I've realized that if I can be consistent in getting 1:3 setups on gold, then I am golden, right? So 1:3 and out, right, before even the fair value gap, because the aim of any trade setup is not to be right, but is to make money, right? And over time trades compound. So of course, going further, if I notice, okay, price does usually respect this, I will perhaps look into bringing my stop loss over here. If you draw your stop loss over here 1:6, if you had aimed for 1:3, you will have been out at around this point. You know, it's pretty good stuff. All right, so that is the trade essentially, guys. go to your charts, go to XAU USD, backtest this. You will see it repeating over and over and over again. Remember, we started from the daily time frame, right? So we went from the daily, time frame, daily, right? Got our institutional reference point there and what order flow might be. So liquidity sweep as well, further refined on the 4 hour, right? And also a liquidity sweep on the 1 hour, and a market structure shift as well on the 1 hour. Went to 15 minutes to refine our fair value gap for better risk to reward, and then stop loss below order block, right? So if there's a really good 1 hour order block, you can use that as your stop loss, right? Stop loss below order block, preferably 1 hour, refined to the 15 minutes. So that's the trade setup, guys, and see you guys in the next video. Turn on the bell notification to stay updated. All right, peace, guys.